Hey everybody, this is John. Welcome to the free video. Let's look at a couple of things here just regarding, first of all, the ECB announcement and various reactions to various markets. First of all, of course, the euro. You had a little bit of short covering into the announcement, and then it was kind of like, we're not going to do anything. Too bad, plunge, kind of come back up, and then it just kind of bled lower all day. At the end of the day, not huge movement. The real big movement happened in the bond market. Now, this is important for a couple of reasons. Is that the bonds, they're you see a little bit of kickback bounce here, but they're down over 2 full points today. And the important thing here is that when you see a major asset class like this unravel on what I would call fairly expected news. Okay, there is, okay, is the ECB going to come out and are they going to get more aggressive with their, trying to solve their economic issues, meaning throw more money at it? And they kind of said, no, we're good right now. And bonds came off hard. Okay, now, does that necessarily make sense? No, not initially, but when you see a big asset class like that unravel, it just talks about, you don't typically see money come hard out of one asset class. It starts to roll into other asset classes. So then that just begs the question, like, okay, are we are starting to see a stock market top, yes or no? And this is stuff that we've been talking about in, well, let's look at the future so we can see that pre-action there. The something that we've been talking about here in terms of, hey, there's these different signs setting up, but we've had no kind of what I would call confirming signals, right? Confirming technical signals. And so if we look at the NASDAQ here, we did have that initial sell-off, and we essentially, it put in a floor, and we just kind of ended right there. And so the question is what happens here? Well, from a daily perspective, we're not near any technical sell signals in terms of like a key moving average that I like to look at, which is the 21. What we do have in effect, though, is what's called the pit bull low, where the low is it's typically put in on the Thursday or the Friday, the week before monthly expiration, and then we rally into expiration. Now, what I could see here, because that's been happening, that's like happened 12 out of the last 13 times. What I could see here is if this market really is ready to sell, and we're starting to see money come out of some unusual asset classes, that we do the pit bull low, we rally, one last gasp in the monthly expiration, and then we roll over. Okay, so that's what I'm kind of looking at for the indexes, and then the question is as usual, as always, is how do we time this stuff? So one of the scariest things, especially in this market, okay, because the market moves have been unpredictable. I would say that there have been many other markets in the past where at least they made sense, okay? And in this particular market, things don't make sense, and I think it's going to be like that for a while. So we want to have good ideas of where institutional support and demand is going to come into play, okay? And here's the thing. The nice thing about this is about catching reversals, right? And there's pros and cons of doing this, because if you're not sure, then what happens is like, okay, I like Amazon here. Well, I want to, maybe you want to buy some here. Okay, well, this is showing institutional supply up here, right? It's like, okay, well, then you just keep buying it all the way down from 790 and still buying it and still buying it, and here we are at 784. Well, this is just a 30-minute chart. We're not talking devastation, but it's no fun if you're buying this on Tuesday, especially if you're buying calls and sitting on not only losing money on the intrinsic value of the call, but you're getting that premium decay, and you need the stock to make like new all-time highs just to get back to where you were. Okay, so that's not fun. So in something with reversals, and the other tough thing of going like, okay, when do I come in and actually buy this thing, is that when you're looking at it, because then when it actually turns ugly, when it turns into selling, then you got, wow, I got selling here, so now this is something that's like, this is crazy. Maybe I should be shorting this. There's a squeeze that's triggered here, okay? But while this is happening, it's also coming into support levels. And guess what? The nature of a reversal is that the moment in time that it's about to reverse is when it looks ugliest. Okay, you've got sell signals here. You've got a squeeze that's triggered short, right? The price continues to fall. And it's something like this that is just like, there's just no way to kind of step in and take the opposite side of that. It's not a good feeling if you're looking at indicators and you're looking for some kind of a confirmation. There is no confirmation. It looks ugly. So what we like here and what we're looking at is something that says, hey, you know what? Get ready, okay? Aim. And this is telling you, like, look, yeah, this is starting to come off. Just get ready. It's not ready yet. Okay, it's not ready yet. Aim. We're getting closer. We're getting closer. And then boom, fire. Okay? And at that moment in time, that is when things look their bleakest, okay? When things look their bleakest, like this thing could just keep on going, and in fact, most people are probably getting bearish on the stock. You get a buy trigger showing you that there's institutional level demand against this level, and now all you got to do is step in front of that, step in with that traffic. Okay, and what I like about this obviously is there's different ways to play this. If you're conservative, you could sell a put credit spread, you could sell an out of the money put credit spread. If you're more aggressive, you could buy calls, or you could ease back a little bit, buy call debit spread. You could buy the stock itself. If this is a futures contract, you could do that. But the nice thing is, again, remember at the moment in time, if there's a reversal, that is the best opportunity to make money, but it's never obvious when it's about to turn. Okay? And it always looks bad. And if you're waiting for confirmation, okay, if you're waiting for confirmation when everything looks good, that's going to happen back up here at like 790. It's like, oh, okay, everything looks good again. Well, at that point, that's when you want to be taking profits, okay? Okay, so just real quick, these are the kind of things I'm going to be talking about this Saturday. And really the whole idea is being able to understand and catch reversals. And the whole idea here is that reversals look their worst. Okay, they look when the times that they look their worst, you want to be able to understand quickly when it's okay to step in there. It's okay when the institutions are now changing their tune. They were selling, now they're buying, okay, or vice versa. And there's no indicator that's out there that can tell you that with this level of clarity. All right. Now, that's great. This class, we're doing this class on Saturday. The indicators included in the class. Okay, great. Now, a couple of people asked, well, okay, I like that. I just want to get the indicator. Well, keep in mind that the class isn't just about how to use the indicator. It's about how to trade reversals. I mean, how to manage the trade. Once you get into the trade, where do you get out of the trade? It's kind of the tips and tricks along the way. How do you defend a position if it's not quite working out? How do you plan it out? What's the process? What are you looking for? What levels are the best levels to use? Because there are pivots. There's Fibonacci clusters, there's voodoo lines, and all these other things. And the biggest problem with reversals is when people are looking at too much data, okay? And you've got to strip it away, make it simple, so you're looking at only the basic stuff that's important, okay? And then once you get into the trade, if you want to throw some more stuff on there to help you manage it, that's fine, but you want that kind of nice, bare, easy to follow stuff, okay? So anyway, this class is going to be great. It's on Saturday. This is also the first time that Carolyn and Henry and I will be working together, and we're kind of the three amigos, or the two amigos and the amiguette, who formed this business, who came together and started trading together. And it's like, okay, this is awesome. We should do this with options. And this is something we've been wanting to do for a while. And Carolyn's going to fly in, and if you want to do the live trading, we'll be doing that together, and it's just going to be great. So we'll get the Saturday class on the 10th. That is $497 until Friday at 5 p.m. After that, it's going to go up to $697. Okay, and then the live trading is $997. That includes the Saturday class, which includes the indicator, which includes 5 more bonuses. You can scroll down and you can read about it. And then Friday at 5 p.m. it's going to go to $1197. Okay, it's going to be a great class. You guys are going to learn a lot. These are going to be great tools to kind of knock us out and get us through the rest of the year. You guys have a great night, and we'll see you at the next update.